Let's, though, get across some of the companies out there that have been pushed about by news. Philip Pepe from Shaw and Partners joins us now. Philip, nice to see you. Almost in the flesh. Premier Investments is one of those retailers that we've been speaking about quite a lot lately. Again, doing pretty well with that trading update coming through. Is that just as good as it's going to get, though, potentially, when we start to think about, rising mortgage rates and interest rates?
Well, yeah, it is interesting because they put out a strong trading update with their full year results where they talked about the first 7 weeks of trading. And then with their AGM release on Friday, they updated it for the first 12 weeks, and they're up 40% versus COVID and over 20% versus pre-COVID, sales. The market, or some analysts, are waiting for their earnings to go backwards, and I think consensus is forecasting a retreat in earnings. A, because either revenue will go backwards as extra expenses start to bite, or B, costs start to go up, staff costs, leasing costs, etc. But good retailers manage the business well. I mean, Solly and his team have done this for a very long time, and they've shown that in very varied conditions over the last 2 years, they've still been able to grow revenue and grow margins. And they've done that by removing costs when necessary, closing down unprofitable stores, and managing their inventory very well. So is it as good as it gets? Consensus is certainly forecasting that, but the run rates put out on Friday, if they continue, according to our analysts, you're looking at a potential 10% upgrade to consensus into FY23. So perhaps not. Our view is always buy a good business, and this is clearly a very good business with some strong brands. It's very well run. So we think potentially no, this isn't as good as it gets. If the run rates continue, you're looking at consensus upgrade into FY23. So we really like this one. Quality company, which I think it's up about 5% today, so doing very well after that announcement.
Yeah, the brokers have come out and been pretty positive on the stock from what I have seen. Okay, let's talk about perhaps a winner from the budget. I think I had a chat with one of your colleagues there about Calyx, because it plays into the whole decarbonization of the economy story. But is that how you view Calyx, through that sort of government funds? There's going to be lots of money coming around, or is there something else fundamental about the company that you also like?
So two things. A, it's a clean and green company in a space that people want to invest in. We're spoilt for choice in this country. We aren't spoilt for choice for green companies that tick a lot of everyone's boxes, even the ethical funds. This is one such company. So what they do, they try and take carbon out of the construction process. So they're focused on cement, lime, iron and steel. Combined, those commodities represent 15% of the world's carbon emissions. So if we can do something to eliminate the carbon from that process, that's actually good for the world, right? I think carbon credits are circa €80 per tonne at the moment, up from €10 not that long ago. So they're actually trying to find a solution for that problem, and they've got prototypes in terms of their technology, and it works. It's about 2 weeks ago they announced an important agreement with Heidelberg Cement, who suggests that if and when this technology works, and it looks that it will, Heidelberg Cement will roll out their technology globally and pay them a royalty. It should have been a winner from the budget. Most governments around the world are actually funding this sort of expenditure. It was announced on Friday that the Australian government has reversed a decision in the May budget. The May budget had an additional $41 million in funding to Calyx related projects. That was actually removed on Friday, so hence the share price reaction. There is a plan, or the government has a plan that it will announce next year, so we'll sort of wait and see what they say. But clearly, governments around the world and the private sector are throwing money at this space because reducing carbon emissions is actually quite important. So we think, given the share price reaction and the fact that this is actually necessary expenditure if we're all going to live long and healthy, we think at the moment it's compelling buying based on perhaps an interesting decision by the government on Friday, which might only be short term, but we expect to be reversed or additional funding come through in calendar 23. So we quite like Calyx at the current share price.
I'm loving the positivity that you are expressing today, Philip, because we're oftentimes really weighed down by the fact that there's more pain to come in the broader markets, but we're told continually that it is a stock picker's market, bottom-up fundamentals. And I believe that you've bought another company to us, IPD Group, which, is making cash. It's got a strong balance sheet, like all of those sort of fundamental things that you should look for as an investor, correct?
No, agreed. And that's covered by one of my colleagues, and I believe it's upgraded twice since its IPO. It manufactures and supplies electrical infrastructure products for the construction sector, infrastructure, data centres, etc. So providing necessary products for a growth market. But what I like about it that it's unique. There's a lot of talk about electric vehicles. More and more people are buying electric vehicles. I think they were the number 1 or number 2 selling vehicle in Australia. You can't just drive that into your apartment building and park it and charge it. You can't just drive that into work if you drive to work and park it and charge it. Infrastructure needs to be built to be able to make sure there's enough power in the building to charge all the electric vehicles and monitor the inputs and outputs. So they actually provide a solution for that. So for us, it's another way to play the whole electric vehicle growth story, which is here to stay, and bearing in mind that someone needs to build the infrastructure to help us all drive our electric vehicles if that's what we want to do. And IPD Group is one way you can play that theme, and investors seem to like it. It's actually performed very well in a choppy share market, and Shaw and Partners definitely likes this story.
IPD Group. So we've got Premier Investments, Calyx, and IPD, all looking good in the eyes of Shaw and Partners. Hey, what's the water cooler talk around there today, Philip, about the rally that we saw on Wall Street on Friday, spilling over into sentiment here, but it's such a big week in terms of risk events. We've had retail sales, have had China data, have the RBA, have the FOMC, have jobs data on Friday from the US as well.
So I think the main comment around the water cooler or double espresso for me is September was the worst month in 20 years, and I think October is the best month on record ever. So that's how quickly things can change. So the market can get nervous. The market does react to news pretty harshly. But in a market is net long, people who think longer term, often you get presented with once in a 10-year opportunity to buy stocks cheaply, and those who pounce sometimes see very quick gains in October. I wouldn't count on those, but gee, the moon's very different from September, which is a tough month for many, versus October, where you mentioned some M&A stuff earlier. There's a lot of money looking for good places to invest, and when you see some prices at all-time lows in September, money gets put to work in October, and I think we've certainly seen that through October to date, and looks like today is going to be another up day, making it a very strong month. Let's hope it continues.